Welcome to Wolf Nest, your trusted property management in Salt Lake City, Utah. The economy and housing market continue to send mixed signals this May. While inflation remains elevated and interest rates stay uncertain, Utah's rental and real estate markets are showing resilience. Let's break down what's happening nationally and locally, and what it could mean moving forward. The U.S. economy added 115,000 jobs in April, outperforming expectations while unemployment remained steady at 4.3%. Healthcare, transportation, retail, and social assistance led job growth. However, signs of cooling remain as wage growth slowed and technology companies continued reducing positions, partly due to increasing artificial intelligence adoption. Overall, hiring remains stable, but growth has slowed compared to previous years. Weekly unemployment claims increased slightly nationwide, but remained historically low, signaling continued labor market stability despite economic uncertainty and rising oil prices. Initial claims reached 200,000, still below levels typically associated with labor weakness. In Utah, claims remained resilient as filings declined from 1,394 to 1,328, reflecting continued strength across the state economy. Inflation continues to be a major focus. March inflation increased 0.9% month-over-month and 3.3% year-over-year, largely driven by rising fuel prices linked to international conflicts. The Federal Reserve held rates steady between 3.5% and 3.75%, though policymakers remain divided on future decisions. With inflation still above target and uncertainty surrounding future leadership changes, markets currently expect minimal movement in rates. Utah's rental market is facing temporary pressure from a recent wave of newly completed housing inventory. This has created increased competition among landlords, slower leasing activity, and greater renter sensitivity to pricing. However, the long-term picture remains strong. Builders nationwide are slowing new development due to high construction costs and elevated interest rates. Utah already faces a significant housing shortage, particularly for affordable rental units. As current supply gets absorbed and fewer projects are delivered in future years, rental demand is expected to remain strong and supply could tighten once again. For property owners, this is not a weakening market. It's a transition phase in the housing cycle. Utah's housing market continued building momentum in April. Median sold prices rose to $615,000, increasing 2.85% month-over-month and 2.52% year-over-year. Inventory climbed 8.51%, giving buyers more options while maintaining strong market activity. Utah's rental market also showed signs of improvement, with statewide rents increasing 0.9% month-over-month. While annual trends remain slightly below last year's levels, stronger monthly growth suggests improving demand and market recovery. The rental market is showing signs of stabilization. Rents have increased slightly month-over-month but remain below last year's levels. Some areas are seeing modest growth, while others continue to level out. This suggests a market that is rebalancing as it heads into a more active season. Housing researchers are warning that proposed restrictions on build-to-rent communities could reduce future housing supply nationwide. Experts estimate that these changes could significantly impact rental construction and increase future supply shortages. At the same time, the National Apartment Association continues working with regulators on potential nationwide rent and fee transparency standards. Future policy changes may influence how rental housing providers operate in the years ahead. While today's market may feel more competitive, Utah's long-term fundamentals continue pointing toward strength and opportunity. Strategic planning during transition periods can help property owners stay ahead and position themselves for future growth. Whether navigating changing market conditions or preparing for long-term success, Wolf Nest is here to help every step of the way.